With all the talk going around Ethereum, I've decided to invest in ETH. Take note, the keyword used here is invest, not trade. In this video, we will discuss my reasons why, my strategy, and if it makes sense to you, go hit that subscribe button and share this video out. Just a word of caution, I'm new in this space and whatever capital I'm using for it is something that I've already accepted that I'm going to lose, and it's something that I can live without. My strength is really in the US equity space, where we've done some serious study, built algorithms around, and infuse it in this platform called TipTicks. It spots long swing trade ideas we've witnessed work repeatedly, focusing more on quality than quantity. Sign up now at TipTicks.com to get notified as your first 50% upside potential trade idea is on TipTicks. Now that was a good segue. Ethereum, the blockchain, with ETH as its native currency, the second largest crypto by market cap, which is known for its smart contract capabilities that power DeFi or decentralized finance, apps, and NFTs or non-fungible tokens, among other things, has recently activated the London upgrade, which is designed to reduce the number of ETH coins in circulation at any given time by burning fees in the form of ETH, which would have been paid otherwise to the miner when sending transactions. More upgrades will be applied to the blockchain down the line, transitioning it from ETH 1 to ETH 2.0, moving from proof of work model to proof of stake model. Now, what's the difference between the two? In a proof of work model, to be rewarded, miners have to solve complicated calculations, usually requiring huge amounts of energy. In a proof of stake model, by staking, miners can mine or validate block transactions based on the amount of coins a miner holds. And when coins are staked, they are usually locked in for a long period of time, thereby lessening the supply of coins in circulation. In the stock market, this is similar to increasing treasury shares, which lessens the float of a stock, the shares available for trading, which usually leads to price appreciation. Given how proof of stake works, it is seen as less risky in terms of network attacks and is more environmental friendly. With more ETH being staked than burnt, which means lesser supply in circulation, increasing adoption to the blockchain and growing user base, which translates to more demand, this scenario should create an upward price pressure on the instrument. As Kevin O'Leary said, a renowned investor, if Bitcoin is sound money because of the supply cap, Ethereum is ultrasound money because there is no supply floor. Whether or not this has been priced in already, it is to anybody's guess. If you're still having a hard time grasping the idea of Ethereum, I'm not even sure if I'm pronouncing it right. It's similar to a piece of empty land, which alone has intrinsic value. Different infrastructures and businesses can be built on, further augmenting its value. The key to access this is the currency of ETH, which will be in some way in a limited supply. With the upgrades being applied and going to be applied to the blockchain, it makes its use cases more accessible and attainable. Furthermore, unspoken use cases for it could be unearthed. We're just basically scratching its surface. On the technical side, best case scenario for the candles to do is to consolidate within this price range, and once this is over with, resume its upward movement back to $4,000, probably scale higher highs. This is just an assumption and it can go otherwise. If it does, I'm toast. I'm not timing my entry on this one as evidenced by the purchases I've done recently, as doing so is quite challenging in this space. Instead, my strategy is to dollar cost average as long as price is below $4,000, treating it as a long-term investment. What I'm buying here is the narrative of the blockchain, its endless possibilities, and in my opinion, we are still in the early stages of it. This is my basic knowledge of the space, particularly in what's happening with ETH. There's more that I could have said about it, but whatever I mentioned is more than enough for me to dip my toes in it. If this makes sense to you, go give it a look. Should you invest in it, just risk whatever you're willing to lose. For me, there's more risks not having an exposure on ETH and trying to time the entry on it. I honestly regret not educating and exposing myself on the narrative of ETH earlier, but it is what it is. It's hindsight. It will be so fun to look back at this video, see a year or two from now, and see how this will age. Thanks for watching this video, and if you gained a little something from it, help this channel in the YouTube algos by liking this video and subscribing to the channel. Don't forget to check TipTicks out and sign up as your first 50% upside potential trade idea is on the platform. This ETH position comes with a lot of risks. I'm wishing myself a lot of luck, and I'll see you in the next one. Peace. Yeah.